Good morning, I'm Joe Neighbour from Signal Centre, and today I'll be running through some charts on the oil markets just to give you an update on where we're seeing things from a technical perspective. Usually it's Steve doing these on a weekly basis, but today, unfortunately, you're stuck with me. So just a quick update on where we're at with commodities in terms of the latest headlines. Oil prices recovered ground yesterday, but an API inventory build undermined confidence. We've also seen dollar strength act as a headwind for oil. There was further underlying concern, obviously concerning the latest developments with regards to the coronavirus variants and the potential impact on demand. Nevertheless, there was a stronger recovery later in the European session, and we'll come on to the charts shortly to see where we're at from a technical perspective. Now, obviously at 3:30 today, we do have the latest EIA crude inventory oil number. Stockpiles rose by 1 million barrels in the previous week, so obviously we're keeping an eye on that number come 3:30 this afternoon. Now today, I'm going to start off with the weekly chart, and this all looks quite nice from a technical perspective. Obviously, from these lows that we saw in April last year, we're in a pretty steady uptrend, but although we have seen a corrective move in the last 3 weeks or so. Now, my colleague Steve has been across this from an Elliott wave perspective, talking about the wave structure here and having something along the lines of this. He did call this at the end of this fifth wave around about the 76.80 level, which was bang in line with this previous high that we posted back in October in 2018. And that worked out quite nicely. And since then, we have seen a corrective move to the downside. But that's been capped by the strong upward trend that we have in place, pretty much bang on like that line there. And we did see some buyers re-emerge. So certainly from a trend perspective, all looks pretty good. From a wave perspective, obviously, we were expecting some sort of correction on oil to occur. It so happens that it came in line with the striking of this OPEC plus deal and for more oil to be pumped by the OPEC producing nations. So just over to the daily chart. So this is quite interesting from a shorter term time perspective. We did see a break of this bullish channel on oil, and that occurred actually on the 15th of July. And then we saw a continuation to the downside. Quite an impulsive move actually on the 19th, and that was backed up by some strong volumes as well. So that isn't a particularly healthy sign in the very short term, but there are some supports on offer between 65.10 and 66.41, which seem to have done a job, at least in the short term, of preventing any further price falls on oil. So while prices remain within this band of support between 65.10 and 66.41, there is potential scope for a bounce in the short term to the upside. My concern now would be from a technical perspective as to whether or not this is actually going to lead to a retest of the underside of this channel. So for me, I'd be potentially wary of this 73.13 level as an area whereby we could see a retest of this level. Obviously, that would potentially challenge very close to the highs that we've just posted. But in and around that zone, I think that's where we need to be wary. That could be the make or break point as to whether or not we are going to see a continuation of trend higher, or whether or not we actually are going to see prices continue to consolidate and potentially break down in the short to medium term and form a much deeper corrective move. So 65.10 is the key level for me. That's the low that we posted a couple of days ago, or yesterday in fact. If this level breaks, then I think we may see a continuation lower in the price of oil. 73.30 is the key level on the upside. I think we may see prices consolidate and range between this zone in the short term. If we can get above 73.13 on a closing basis, then I would fancy us to go and challenge those highs. If we make new highs, then all is pretty good on the trend structure and further upside can be expected. So all in all, the price remains pretty strong in oil. Yes, there are some threats of a corrective move or at least a consolidation given the strength of the move higher that we've seen. but overall these are the key levels to watch. So on the downside it's 65.10, on the upside it's 73.13. We may see prices range between these two price levels in the very short term. That's the roundup on oil today. Hopefully it's been helpful and can help you position yourself on the oil markets for the coming days ahead. We'll be back next week with another roundup on oil. Until then, trade safe and have a great day. Goodbye.